What is up guys, Stephen Harvey here from Plan to Profit, and in today's video I'm going to be bringing you my Sharesies portfolio, and I must say this is a video you want to stick around and check out because a lot has changed in my portfolio, for better. Some might think for worse, but most definitely for better. So yeah, of course, make sure you stick around, and if you guys haven't subscribed to this channel already, then you can do so down below. Hit that red button. And if you do enjoy the video along the way, don't forget to smash the like button. Now, if you do want to get started with investing, then you can get yourself $5 by using the link in the description. So hit that link, head through and sign up, and you'll get yourself $5 to use on Sharesies. You can actually use it obviously in the US stock exchange because they do have that on there as well as the New Zealand stock exchange. Buy yourself some companies or buy yourself some ETFs as well. That's obviously up to you. But speaking of stock exchanges, Sharesies have actually also introduced that they're going to be bringing the Australian stock exchange into their platform. So we can see here on my computer, Australian shares are coming soon. So if you want to register your interest, you can just easily just put your email in there, and they'll kind of give you updates on that, and they might even give you early access as well. Most likely they will. So yeah, you can do so as well. I'll do another link down below there. It's not a sign up link, but you can just pop your email there if you want to keep updated with that also. But moving into my portfolio now, and I was just having a little laugh because it is just really different to what it was in my last video. In my last video, you'll notice I already kind of sold off a lot of shares, and well, this video is kind of very similar. I did sell a lot of shares as well, with my portfolio value sitting just under 1,000 New Zealand dollars here, so $948. We can also click on this little arrow here. It's going to show us that's my total returns, but now that I've kind of withdrawn money and sold shares and things like that, it's actually inaccurate because, you know, how can I be $1,400 up and have a portfolio value of $950? But yeah, it kind of gives you an idea there. Our portfolio was sitting at about 12.7%, so a pretty healthy portfolio. In fact, I didn't actually sell any shares for a loss. All of them that I did sell were in the green. But scrolling down here, and we don't have to scroll very far, we can see the three companies that I'm currently owning. That is Air New Zealand, Kathmandu, and Kiwi Property Group. And you can probably guess why I'm kind of holding on to these companies, because they are all in the negative. Air New Zealand, in fact, even it was in the positive kind of when I did actually sell. It was about 1% up. But Air New Zealand is actually a stock that I'm going to keep holding for quite a while. And that's just because of the current climate with the pandemic and everything like that. The share price of Air New Zealand, and if I click into it, we can have a look. I've kind of just been buying here and there as you guys have been signing up with my link, so thank you for doing so. But if we look at it over kind of that 5-year period, because it's obviously been over a year since the stock market went for a massive dip, we can see, yeah, it was sitting around this price range, you know, between $2.80, $2.90, even at the kind of $3 range over here as well. But we want to kind of more look in 2019. And then obviously 2020 came, pandemic, everything like that, lockdowns happened, and it just kind of went this way. And I did kind of buy around here, but as you can see, I brought in more in these lower periods. So looking kind of if this kind of picks up again, obviously we've got a long way to go before we can start traveling around the world and things like that. So that's why I'm holding on to this long term. But we can see that kind of recover as a recovery stock. A lot of other airlines and cruise lines as well, they're looking to kind of recover to what their prices were, but that could be something that could happen in the next 5 years. Moving on to the other two companies though, sitting at kind of 22% and almost 20% here down on both of them. Kathmandu and Kiwi Property Group were both actually hit hard in the March lows in 2020 as well, so they haven't really recovered to what they were before, because both of them were green before March 2020 came. But obviously you guys probably are wondering why I decided to sell a lot of my shares in Sharesies. One is because I do actually prefer investing in the US stock market. I think it moves a lot more. There's a lot more ups and downs and opportunities to buy in these dips and then for them to recover again. But I did actually take a portion of that money and invest it in the US stock market. And you're probably asking, why did I not invest it just on the Sharesies platform and withdraw it and put it onto a completely different platform? It's primarily because of the fees and things like that. I know with Hatch, they do have a $3 fee for buying and selling, but if you work that out in terms of the percentage of fee, so Sharesies charge more of a percentage of the amount you invest. However, with Hatch, they just charge a flat fee of $3. And so with my kind of investing habits, or you might say, I invest large chunks at a time. So it means when I invest this large chunk, if I'm investing over, I think over $500 or $600 at a time, then actually for fees wise, Hatch is a more favorable platform. But if you are investing less than $500 at a time, then I do highly recommend Sharesies as a platform to do that. I did also take a portion of that money and I put it into cryptocurrency, so I'm quite a big advocate for Ethereum and Bitcoin, and in fact there are a few other altcoins that I've been playing around with and I'm looking at doing a video series on and trying to grow a $1,000 portfolio to $10,000 and everything like that. So if that's something you want to see, then let me know in the comments below. And the last portion of the money kind of went into more personal things. You know, I've kind of put some money in there, saved it up, and I thought, you know what, I'm going to kind of treat myself a bit. And I've decided to actually buy kind of some parts for a PC, and I'm going to build a PC. So that might be something that will feature on the channel. But yeah, I wanted to kind of build a PC that would almost complement this YouTube channel in a way so that I could produce videos kind of faster and higher quality, because when you film in 4K and then you edit in 4K and then render that 4K video as well, it takes a long time depending on the PC that you're on. So with what I'm running right now, it is actually pretty good quality, and but with what I want now in the future, getting a better GPU, better CPU, motherboard, and even obviously RAM is really important too. So it is something I'm looking at upgrading, reinvest the money into my channel and growing it more. So I do really appreciate it every time you guys hit the like button, use those comments below, hit the subscribe button, or even share my video as well. It really does help the channel, so thank you very much for doing that. However, this was a very short and sharp video. Like I said, not a lot to see, but we can actually see that my portfolio is actually a lot less than what it was in my last video. And in terms of the Sharesies videos altogether, there probably won't be a lot of Sharesies portfolio updates because there won't be a lot of change within the portfolio. However, I am obviously constantly doing Hatch videos. So same with the stock market. If you enjoy the Sharesies video, then you guys will enjoy the Hatch videos as well. And of course, I'm always talking about investing, personal finance, and business on this channel. So if this is something you want to keep up to date with, hit the little bell next to that subscribe button if you have already. And of course, we'll see you guys in the next one.